How to determine how much life insurance is needed. Placing a value on objects such as a home or car is easy. If your car is worth $40,000, then you should have enough collision coverage to cover a total loss. If your house is worth $250,000, you need enough property coverage to cover a total loss. How do we determine a value of our life? The main purpose of life insurance is income replacement. The life insurance proceeds should be able to replace the primary breadwinner's income for a given number of years, or in the case of a non-working spouse, the proceeds should cover child care, housekeeping, and other domestic costs. It can also be used to ease the financial burden on family members that may assist in the case of a tragedy. In a perfect world, you would use the interest generated from a life insurance policy to pay for expenses in perpetuity. But in today's uncertain world, that may not be the best plan. No longer are people comfortable with a large sum of money placed in an at-risk investment, such as a mutual fund or a stock portfolio. Many people prefer to pay off the mortgage and all large expenses to ease the ongoing financial burden, which is a strategy that seems to be a valid one in today's economic environment. The D.M.E. method. In this method of determining the face amount for a life insurance policy, 4 basic financial components are used to determine what level of coverage is needed in order to protect your family in the untimely event of the loss of a breadwinner. Debt. Obtain the total amount of debt that you have including auto loans, credit cards, student loans, personal loans and other financial obligations. Income. Take your current income and multiply it by the number of years that you would need your family to benefit. Mortgage. Add up all mortgage balances. Education. Estimate the future cost of a 4-year college education and multiply by the number of children that you have. Plus retirement, total dollars needed for life insurance face amount needed. As you can easily see, there is a huge need for life insurance in this case. With a mortgage balance, debt to pay, income to replace and an education to fully fund for 2 children, a premature death to the family would be totally devastating. But the need for over $1.5 million of life insurance may initially seem overwhelming and potentially expensive. That is not necessarily the case. This is where term insurance comes in.
Book your appointment now.